Hello everyone, welcome back to my fourth session on Introduction to Income Tax for BCom 5th semester. Dear students, in my previous session, I have discussed about the meaning of many important terms like meaning of individual, meaning of previous year, meaning of assessment year, meaning of assessment and the meaning of income in detail. Now I would like to proceed further with today's session outlines like assessment, gross total income and computation of total income. Then first of all, let me make it clear about what is assessment. Assessment is nothing but the computation of the tax liability. Then how to calculate the tax liability? The tax liability can be computed in three important steps. Of that, the first step is computation of gross total income. Then after computing the gross total income, we have to subtract the deductions if any under section 80C to 80U. Then we will get the total income. That is the second step. Then after getting the total income, which is also called as a taxable total income, we have to charge the tax based on the provisions given during a particular year, and that is what we can call as the assessment. Then the income tax department examines the return of income for its correctness. The process of examining the return of income by the income tax department is called as assessment. Assessment also includes reassessment and best judgment assessment under section 144 of the Income Tax Act 1961. Dear students, this assessment, as I have just told, can be done in three important steps. Of that, the first step is computation of gross total income. Then, what is gross total income? As per section 14 of Income Tax Act 1961, gross total income is to be computed in 5 important heads. The first head is salaries, then income from house properties, then profits and gains of business or profession, then capital gains, and after that we have also to cover the income from other sources if any. The aggregate income under these heads is termed as gross total income. There are major 5 heads of incomes are there. We have to club all these heads together, and whatever the amount arises, that is called as the gross total income as per section 14. Right? That is, dear students, the aggregate income under section 5 under the 5 heads of income like salary, house property, business or profession, capital gain and other sources is termed as gross total income. Then what is total income? Total income of assessee is gross total income as reduced by the amount permissible as deduction under section 80C to 80U. The Income Tax Act 1961 made it very clear about the computation of the total income. Whatever the gross total income we got from 5 heads of income, from that we have to subtract the deductions under section 80C to 80U. Then whatever the balance arises, that balance is called as total income. We will discuss about these deductions under section 80C to 80U in detail in the respective chapter. Then after calculating the total income, whatever the balance arises, on that balance we have to charge the tax, and then the assessment procedure will be completed. Then the total income can be computed in this way. As I have just told in the last slide, total income can be computed through the 5 important heads. Of that, the income from salaries, then income from house property, profit and gains of business and profession, capital gains, income from other sources, then we will get the total income. So these heads of incomes are to be covered with the important items like this. Income from salaries covers salary, bonus, commission, etc. Then taxable allowances, if any, are to be taken in this head. Even we have to add up the value of taxable packages, if any, then we will get the gross salary. From that gross salary, we have to subtract the deductions under section 16. Here, three important deductions are allowable. One is standard deduction under section 16 subsection 1. And second one is entertainment allowances, if any. That is under section 16 subsection 2. And under section 16 subsection 3, we have to subtract the tax on employment. Then balance is called as net taxable income from salary. After that, we have to go for the second head of income, that is income from house property. Here we have to first of all compute the net annual value of house property. The detailed information about all these heads of incomes are to be discussed in detail in the respective chapters. But here briefly I am quoting that how the computation of total income will take place. In that way, net annual value of house property is to be computed, and from that we have to make the deductions under section 24. Then whatever the balance arises, that is called as income from house property. After that, we have to go for the third head of income, that is profit and gains of business and profession. Here, first of all, we have to take the net profit as per profit and loss account. And from that and to that, we have to add or less some adjustments. As per accounting practices, we have made some adjustments, but as per income tax practices, we have to make some adjustment to that profit and loss. And after that, whatever the balance we get, that is called as net profit and gains of business and profession. And after that, we have to go for the fourth head of income, that is capital gains. Capital gains as computed is to be taken. From that, we have to subtract some exemptions under section 54, 54B and 54D, even more than that also, if applicable. And after that, whatever the balances arises, that is called as income from capital gain. Then the last head of income here is income from other sources. Here we have to take the gross income after that, and after gross income or the gross total income, we have to make the deductions. That deductions are to be taken. Then we will get net income from other sources. After this head, we will make the aggregation of all these 5 heads, and that is called as gross total income. The aggregate of head A, B, C and D and E are called here as the gross total income. From that, we have to make the subtraction of deductions under chapter 6A under section 80C to 80U. There are various deductions are eligible. And after that, whatever the balance arises, that balance is called as total income. And on this total income, we have to charge the tax as per the provisions provided during a particular assessment year. Regarding these important heads of incomes, we will discuss in detail in the respective heads in my near future sessions. Dear students, you can go for these references for income tax subject. Thank you.